Are you wanting to get the latest market updates when it comes to the Bay Area real estate market? Maybe you're thinking about buying, selling this year, or maybe you're going to go through some planning for spring of next year. My name is Spencer Sue, and in the last 5 years, I've been able to help over 250 families with their moves. And every single month, I go over what is happening with the Bay Area real estate market, what is happening when it comes to interest rates, a little bit of my thoughts, what's going to be happening in the near future and over the next 3 to 6 months. But also, I'll give you a glance as to what's going on with the stock market because all of these things do coincide with why people are making moves. I'm also going to be going over the general stats that you need to be mindful of so that you can make an informed decision about your moves. And of course, if any of this is something of interest or if you want to go over a game plan, I can help you every step of the way. My contact details are below. Let's get into it. First and foremost, let's talk about the sales price. Right now, I'm going to start off with going things high level. We're going to be looking at all the main counties here in the Bay Area, which is Alameda County, Contra Costa County, San Francisco County, San Mateo County, Santa Clara County. Sorry, Marin, we're going to skip you at least temporarily for now, but we'll get to you guys a little bit later. So in terms of the data, let's take a look at this. October numbers are complete. And remember, October transactions are those that are from basically September in contract. But you can see the prices has increased. It is now at $1.3 million versus before is at $1.25 million. This is a pretty good big increase. And this is something that I kind of warned and shared with a lot of people up front. You see these normal trends. So when you saw the opportunities in the summer, you should have taken advantage of it. But we will likely have some of these opportunities again come the winter time. But you can see the summertime had dipped. You can see September numbers increase. October numbers continue to increase. But look at the same thing that has happened last year, right? If you look at September, October actually last year wasn't anything special. I had a minor decrease, but September was a little bit higher than the summer. And then you can see some declines, but the declines won't typically happen, as you can see, until the December timeframe. I'll give you some of my thoughts of what you can expect, but you can see prices have been on the rise. And this is a lot of data. Take a look at this. It's 71,000 listings because we're talking about all these different counties together, including single-family condos in town for medium sales price. There's a few key things I want you to be aware of this current stat. Number one, there's actually been a lot more new listings come on the market every month, which has been good. Even though prices have risen, more sellers have been more willing to sell and put their homes on the market. Let's kind of do a comparison, like October this year versus October last year, September this year versus September last year. You can see in all these counties, October, 4,978 new listings. You compare that to October of last year, 4,100. Right, so that's an increase of about 800 listings. So that's equivalent to about 20%. Look at September of last month, 5,765 versus the previous time, 5,087. So that's another 700 new listings. So then that's equivalent of, in that case, 13, 14%. Right, so we do have a lot more product, a lot more homes that have come on the market only because of several reasons. One, the prices have done well. Remember, most people that are selling homes, they also are trying to buy their next home. Now, they are all in the same boat as the new buyers, right? They all have mortgage rates they have to be okay with. But at the end of the day, the mortgage rates can be understood because every 1% difference is only equivalent to a 10% purchasing power. It's not multiples. So when you go from 3% to 6%, it's not you double your payment. That's not how things work. You increase your payment from 3 to 6, which is 3%, which is about equivalent to 30%. Okay? Be very clear with that. There's a lot of fake news out there that says if once you double rates, it's all of a sudden double payments. That doesn't make any sense. Just put it in a calculator and you will see for yourself. But because the activity has been good, because the stock market is at all-time record highs, we have more sellers willing to sell. Right? So that's something to be mindful of. Now, I do also want to point out the number of actual sales. So this is the stat here of the number of new listings. What is the number of sales? Like how many sales are actually occurring? Take a look at these numbers. October, these are ones that have already transacted. So those are actual ones that have finished. 3,705, right? So compare to that versus October of last year, 3,350. So there's both more of those things happening. That's another 10% increase. So there's been more volume at the same time. So if you are considering to buy and you haven't found many homes, this is nothing related to lack of inventory anymore. This is more related to, are you actually looking in the right areas because prices have increased, or because are you even looking at what has actually sold, right? That's super, super important. Now let's take a look on the median side, just so you can see the sales price to list price ratio, right? So the sale price to list price ratio. Now this will vary significantly based off of if it's a single family home, condo, or townhome. But the fact that even though you have condos and townhomes mixed in this, you can see that the sale price to list price ratio is at 104.9%. So whether they are purposely listing their home lower on purpose, and or the market has gone up, right? You can even see versus October time of last time was at 104.2. Generally, people are listing a little bit lower on purpose. So if you're going to put a search filter, I highly recommend generally put some sort of buffer when it comes to single family and townhome. Either a buffer of 5 to 10%. So if your budget is 2 million, have it at like either 1.8, 1.9 as a list price. That's a pretty good criteria. And you can also have it as a pro tip. Have it for those that are let's say 2 weeks plus. So they have a separate filter. For those, you can then put it at the actual budget that you are maximum comfort with. So this gives you a pretty good idea as to all the different things that are happening. In terms of, let's take a look at this. The days to sell, let's see if this has changed in these respective markets. You can see October in this case, 13 days, median days to sell. It's gone down a little bit. It's a little bit higher than what you see of the springtime, but the springtime, quite frankly, was only between 10 to 12. So 13 days to that doesn't make much of a difference. So there's no real data, there's no real significance of this. Now, what I want to do now is to break it down by county so that you can see, in this case, I'll point out Marin County too. So you can see, are there specific counties that are doing better now than before? Let's pull from October 2023 to October 2024. Let's look at the median sales price for all of these. Right, so you can see, look at this. October, Santa Clara County has done really well, $1.672 million. This is actually similar numbers to what you have seen of the springtime, right? So something to note. Santa Clara County has done very well. Why is this happening? The return to office is a very real thing. You see Amazon have already made a public announcement, even though it's not actually enforced yet. But a lot of companies are continuing to do that, especially where you have some job layoffs that occur where the employees want people back into the office. So Santa Clara County has done really well. Now let's take a look at some of the other counties nearby. Let's look at San Mateo County. San Mateo County right now has picked up a little bit, but not as strong as that kind of peak time of spring. You can see $1.632 million for San Mateo County. Okay, so that's interesting. Let's look at San Francisco. There's always been so much gloom and doom, but they have been doing a significant amount of cleanup, which you may have experienced if you have been in the city. Take a look at this. This number, October 2024, at $1.525 million. This is the highest it has been all year, even more than the springtime. So for those that are thinking about selling or have considered to sell in San Francisco, from a median perspective, you can't argue another better time. If you're not selling, it's because you may be a little bit too ambitious related to your price. But you can see that generally things have done really well. Let's take a look at Alameda County. Alameda County has not performed as well as you can see versus Santa Clara County and San Mateo County. $1.115 million. It has picked up a little bit versus summer, but not as strong. And a big part of it is the commute. Now, if you're living in the Tri-Cities, so like Union City, Newark, Fremont area, you are seeing some opportunity, but those prices have held pretty well. But if you move on to the Dublin Pleasanton, you're going to see a lot more inventory, homes not selling as well, and they're not really hitting their numbers. That's because commute is a major factor again. Otherwise, why would Santa Clara County still do so well and Alameda County not do the same? Let's look at Contra Costa County. If you look at Contra Costa County, interesting enough, it has increased a bit. Now, a part of the reason why this area still has done okay is because you can look at it. It's $825,000, which is the cheapest county that you will find in all the Bay Area. So from an affordability perspective, you're still able to get something pretty good, pretty decent. Now, your commute is going to be further, but at least some people are willing to make that sacrifice because it's so much less than every other option. Now, last but not least, let's look at Marin County. Right, Marin County typically is a great feeder when it comes to getting to San Francisco. And as you saw, San Francisco has done well. Marin County, interesting enough, has also done well. Right, the median price now is at $1.6 million when it comes to Marin County, and so this also has been some of the highest it has been all year. So you see certain areas that have outperformed and have done well relative to the others. And there's two ways to think about it. On one end, maybe you agree, you have the money, your stocks are at record highs, but it's time to let go of that and buy a home, just like everyone else is in these respective counties that are doing really well. So that's kind of one aspect that some people are thinking of. The other aspect, if you are working remote or you're okay with the commute, you can see certain places like Contra Costa County, Alameda County, there is still lots of opportunity because things are clearly at a way bigger discount relative to the others. You just saw it for yourself. So plan accordingly, make the appropriate adjustment, and then you will be successful. Whether you're renting or you're trying to upgrade to the next place. Like I've already done a lot of upgrades, and so these are the common questions that we are having, and there's many different routes to do it. So if this is applicable to you, I can help you every step of the way. I can help you sell. I can help you then buy. We can do the reverse. There are a few ways to do it depending on your financial situation. But let's talk about finances. Mortgage rates are significantly higher now. Ever since the rate was cut by the Fed, interest rates have increased by equivalent to about 1%. So you may be asking, wait a second, I thought the Fed, when they cut rates, means interest rates are going to keep going down. No, that's not how things work. There's a lot of moving parts as part of the equation as to why mortgage rates are what they are, but they typically follow the 10-year Treasury yields. Now, you can see the 10-year Treasury yields have not done that well for many reasons. When we have the election that's around the corner, right now the markets are clearly betting on Trump to win. Otherwise, you would not see all these things happening across the board, where you have stocks at near record highs, you have Bitcoin at record highs, you have like I said, crypto at record highs, you have stocks. And so these are all important things as to why the mortgage rates have picked up significantly at this number. Now, I suspect that we're probably going to be at these numbers for a while. So do not expect any more declines. Any person that says that, I think they're very, very optimistic. I don't think that's the case. I think you'll be very lucky if you're hanging around these numbers. Now, that being said, these are what's public. When you're dealing with jumbo loans, your rates can still be very good right now. You can still get your rates in the low sixes. But whether it doesn't really matter, at the end of the day, you want to calculate what is your max monthly that you're comfortable with, today's rates, and then make a decision and see, are you okay with that monthly amount? Hopefully that aligns with the homes that you're looking for, and if so, then go for it. If not, save more money, put more money down, or adjust your expectations and have a lower amount so that you can get into the place to keep moving on with your life. But this is very important. I'm not predicting or forecasting or even I'm obviously hoping that rates will go down, but I'm not banking on this at all. I think the rates will probably stay somewhat similar. If not, you may actually even see an increase in rate. I'm going completely against the grain of all these other people, what they're saying. I don't think the rates are going to go down. I think the rates are going to be remaining the similar levels that we will see in a range. Maybe it's between mid sixes to like mid sevens now. Mid sevens wasn't like impossible. You can see just in April is already in the mid sevens. So that is very clear, and that is what's happening. Now, the difference though is if you take a look at the stock market, right? The stock market has to continue to do well. The NASDAQ has still went up 1.8% this month alone. Year to date, you can see close to all-time record highs. S&P, similar, right? In the last month, still went up 0.71%. This year itself, it has gone up 21%, still near all-time record highs. So the stock market has still been doing good. A lot of people have been considering to divest from their big gains. Different companies, even in the Magnificent Seven, have been performing and outperforming one another. Some have not been doing as well. And so it may be a good time, if you have too much exposure to the stock market, that you may want to divest some of that and into a home, especially to combat these higher rates by putting more money down, which is what a lot of people are doing. Well, if this is helpful, be sure to like this, subscribe, leave in the comments what you think is going to happen for next year in terms of rates, stock prices, and home prices. I'd love to hear from you. And if this is something that's valuable and something that you're thinking of doing, you got to reach out. Call or text me 408-547-4590. We can jump on a strategy call immediately and get you underway. Talk soon.